Welcome to Markets Now. I'm Michelle Rook along with Risk Management Commodities Chuck Shelby on a mixed day in both grain and livestock futures trade. And Chuck, we did have some of the parts of the commodities sector that were able to kind of come back here with the outside markets rebounding today. And so, have we kind of seen the fears subside with the banking crisis situation?
Yeah, it was a pretty stressful week so far with a lot of negativity, a lot of concern. We saw it in the United States first, and then we saw it over in Europe. So it seems like today things have stabilized, things have settled down. We reached a value level I think was low enough when you look across the board, including crude oil. So it seems like we're okay. It's been a stressful week, but stabilization's our first step in any big break in the markets.
Yeah, and with what's happened with the banking collapse and what we saw in the CPI this week, does that give the Fed maybe a little bit of a slow step here now in terms of next week's Fed move and their meeting next week?
It's almost a mystery what they're going to do.
Yeah.
Obviously, a lot of people believe that the magnitude of the interest rate hikes was part of the factor that caused this problem. You would think they need to slow down a bit and maybe not raise it much of anything, but the market's anticipating maybe not much, if any, change. We'll see if that's the right answer next week.
Yeah. So the grain trade, we finally saw soybeans kind of stabilize here. Some of that liquidation that we've seen by the fund community, do you think it's starting to come to an end or not?
I think we've seen it. What's happened here? We've lost sight of the fundamental side of it. We know that Argentina is really not good at all. I know that's been in the market for a while, but there's a price level here where we become very competitive in the world. And I think we showed up in the bean market, how far down we've dropped. Bean oil had a good recovery today. The corn saw some really good exports. So I think we're finding prices that are value-based and going forward once the economics of the outside markets kind of fade away. I think we'll get back to fundamentals, which I think are supportive at these price levels.
Yeah, absolutely. And what you said about getting more competitive with prices is part of the reason that China's been in here now for the third day. That's like 75 million bushels or a little bit more than that. Do you think that we'll continue to see some export business here by China or other export customers?
I really think China probably looked at Argentina. We've been debating that for a long time, and I think they realize that how much damage is down there and that they're going to need to come to the United States. The question going forward is, with all the uncertainty out there, when you buy grain, you're kind of stepping out ahead of the curve here. So I think it was a positive to see that. Hopefully, we're still at a value-based level that they think is priced right, so that they'll continue to purchase. But step one is accomplished. We were looking for them to come to our markets. They did. Now, as we move into the next few weeks, next month, we got other things to focus on like acres, weather, and I think that will come to the forefront here and maybe motivate world buyers to buy more.
Just curious, was China also maybe a little concerned, or are they getting concerned about Brazil's second crop, safrinha corn?
It's not off to a perfect start down there, so another reason for them to be motivated to buy. I think you also got to look at Ukraine. How much production will come out of there? And corn's a big factor in Ukraine, also wheat. I think with the intensification of the war, what kind of crop they grow in 23 in Ukraine's another factor that world buyers have to consider when they look forward into next year.
Yeah, and like you said, maybe the acreage battle's starting to already heat up here a little bit, and the idea is that we've got so much snow in the northern plains, maybe a little less corn, maybe a little more beans. Is that kind of what the market's looking at right now?
Well, I think one thing, we are going to have more acres, but you could have 90 million or even 89.5 million would be an increase. Right. I think we're pretty well in balance there, and I don't think we're going to oversupply acres on either one of those two crops. So I think there's something to look forward there too. We need a really big yield to increase both carryouts in corn and beans. So there's going to be some premium, I think, put into market as we move into the growing season, see what that acreage mixture is, and then going forward, see what world buyers step up and buy.
Cattle market had a pretty good recovery today. I know the Dow being up helps, but we kind of held some key support that we needed to as well there, didn't we?
Yeah, the cattle market had a pretty good day. Obviously, it was going to come under pressure when it saw all the outside influences, saw the markets going down, saw the uncertainty. So, again, Friday's cattle on feed report is going to show tight numbers. That's not going to go away for a long time, and I think it was good to see the market come back around.
Yeah, I wondered if we were maybe squaring up a little ahead of a bullish cattle on feed report, or at least anticipation of that. And then I saw Packers were kind of in back bidding today, and I think everybody else thought they were pretty much done for the week. What about this hog market? Boy, we imploded today, limit down moves in the back months. Is that tied to the macroeconomic concerns or what?
I think that's just money flow. I would
Okay.
think the funds caused that kind of massive pressure on there. I don't think it's really justified. They drove it down too far, in my opinion. They could probably drop it some more, but gosh, when you look at the cattle market and if the actual cash price drops that much, consumers are going to be really after the pork. So I think it's way overdone, but the funds tend to exaggerate markets, whether it be up or down, and they certainly pushed the hog market probably too far, in my opinion.
Yeah, and we took out some key support, so you maybe had some sell stops tripped there, huh?
Yeah, absolutely. And when you see cattle do what they do and as tight as they are, you just got to look at the hogs and say that's just the traders moving the market, and we'll see how much more they want to push on it.
Risk Management Commodities, Chuck Shelby joining us here today with Markets Now.